Hello, my name is Jeremy Reed with Advent Partners, and I'm here with a quick market update. The S&P 500 is up 8.3% as of Friday's close, buoyed by positive inflation and job reports this year. Last week, the Federal Reserve decided to hike interest rates by 0.25%, now raising the target rate by over 5% since the beginning of 2022. Now, last week's decision wasn't a surprise to Wall Street, but eyes were on Chairman Powell's press conference after the decision. In his remarks, Chairman Powell removed the language from previous press conferences that the Fed anticipates additional rate increases, although he did leave the door open to more hikes in case it was necessary later this year. His comments also noted that it's too early to think about rate cuts considering the current state of inflation. There remains a disconnect between when the Federal Reserve anticipates cutting rates and when the market thinks they will. In other economic news, uncertainty and conflicting data continue. The jobs report on Friday showed 253,000 jobs were added in the month of April, which was higher than expected, pushing the unemployment rate down to 3.4%. But on the other hand, last week's GDP report showed the economy grew at an annualized rate of 1.1%, which was below expectations. Some softening to labor markets is expected as the Federal Reserve seeks to tame inflation. Before I wrap up, I wanted to share a very interesting study I read from YCharts a few weeks ago. The study compared a few different portfolios. The first was a portfolio fully invested in the S&P 500 for the 25 years between 1997 and 2022. During those 25 years, there were 6,300 trading days, and the annualized rate of return was 7.63%. Now, they took this portfolio and they compared it to a second portfolio where out of those 6,300 days, they took the portfolio's 20 best days and put them in cash. This reduced the annualized rate of return by 5%. When a portfolio was in cash for the 40 best days in that 25-year period, the annualized rate of return was negative. So where am I going with this? Economists, including people like us at Advent Partners, spend time trying to identify trends in markets to see what's going to happen next. In a perfect world, we would cash out at the top and buy back in at the bottom, but markets are tricky and impossible to predict with certainty. This study shows that for individual investors, that spending time in the market surpasses attempts to time the market. And also, failing to time correctly can significantly impact your investment returns long term. Thanks for tuning in. And if you have any questions about your financial plan or investment objectives, please feel free to contact our office.